Welcome, ladies and gentlemen, to Commodity TV and a new edition of our online interview episodes. We want to get, of course, an update from Skeena Resources, and Walter Coles, the executive chairman, is here with us today. Walter, good day to Canada. How are you?
I'm great. Thanks for having me. Pleasure to be talking to you.
Yeah, thank you very much for taking the time. Long time no see, personal, unfortunately, with all that Corona stuff. But anyhow, we still can do it online. That is great. Let me just say one thing upfront. I'm a shareholder in the company for disclosure reasons. And honestly, I am very happy about your definitive feasibility study. And as you said, this study is robust and engineered to construct SKE.V. So it looks like this is the next big gold mine.
Yeah, I think so. I think it's going to be an incredible project that generates a lot of cash flow.
Super. Yeah, let's talk a little bit more in detail on the DFS. I mean, 2 billion Canadian dollars NPV, that is a great thing. And you calculated, I think, with 1,800 gold and $23 silver. So there's a lot of upside room, right?
Oh, most definitely. The project has an incredible upside optionality to the commodity price. But the other thing I would add is we're not done yet with making this project better. I suspect over the next year, even keeping if you were to keep gold at $1,800, we're still going to make this a bigger project, uh, maybe slightly more profitable per ounce because we're going to grab some higher grade material that we're going to add into the whole mine plan. So, look, this is just another milestone along the way for a great project that, as I said, will keep getting better.
Okay, super. And I mean, you increased your mineral reserves again by approximately 20%. I mean, reserves, that is really a lot.
Yeah, and I would add to that if you looked at the reserve statement, 3/4 of those reserves are in the proven category, not probable,
Mhm,
proven category. That's the
mhm.
highest confidence level. That means the tightest drilling. That means that what we say we have it. Like super high degree
It's
of
real.
confidence. Yeah.
Yeah, absolutely. I saw also, I mean, compared to the NPV of 2 billion Canadian dollars, you have a calculated capex of 713 million Canadian dollars. I think that is also, yeah, a very good relation, isn't it?
Yeah, we improved. I guess it's called the capital intensity ratio. If you take the capex number 713 million and you divide that into the after tax NPV, I think we ended up at 2.8 times, which was an improvement from 2.4 times in the last study.
Mhm.
Yes, the capex went up, but look, we're in an inflationary environment. Shouldn't be that big a surprise. But I do think the positive surprise is that we're able to grow NPV faster than the rate
Mhm.
of inflation.
Okay. Um, Coming to the financing, I mean, still 713 million Canadian dollars is it is a number, but it is absolutely makeable, especially for the size of your company. And I saw you have 88 million ounces of silver. Would you consider a silver stream or
You know,
something?
I personally am more bullish on silver than I am. I'm bullish on gold, but I'm even more so on silver. And
Same here.
and part of that came out of the conversations that Randy and I had over the last year with smelters. Like I was uh, pleasantly surprised by the interest level from smelters on silver. Like they kept saying
Mhm,
over and over on these calls how wonderful it is that we have silver mixed in with the gold. And what I took away from it, or what I learned, is that the production of solar panels in China keeps growing dramatically,
mhm,
and they
mhm,
need silver as a raw material in the construction of the solar panels. And so that's what's driving this urgency to lock in or try to find sources of silver. So, I mean, my gut is telling me that silver is going to roar. Silver has a fantastic outlook, and so why on earth would we go and do a silver only stream
mhm,
and give up
mhm.
that optionality on the price of silver?
Okay.
So in the streams that we're contemplating, we're thinking more of a gold equivalent stream. So it's
Mhm.
just it's we're not going to give up that strong optionality that we can get from the silver
Mhm.
price.
Yeah, thank God. I'm glad to hear that because I see it the same way. Because I think $32 in silver, and then there's the breakout.
Yep.
Then it's really moving. And you said something really right, which I have not heard that much in the past. They need the silver to build the solar panels.
Yep.
That's exactly the case. What I'm telling all the time about Comex silver, because that's on paper, and with paper you are not building solar panels.
Yep.
I
Yep.
think.
Yep.
So from the financing of the project, it would be like a combination of a bit of equity, debt, and maybe gold, silver streams, right?
Yeah. Um, it, my current thinking is to lean more on the stream than on
Hmm.
the debt or the equity. In fact, I'd like to keep the equity as low as a percentage of the total project financing package as possible.
Hmm.
I think if we were just looking at debt and equity based on my conversations with banks, they wanted us to issue like or provide something like 40% equity to 60% debt. And I feel
Hmm.
like if we lean more on the stream, we can probably bring down the equity component to maybe 15% of the total project finance, maybe even a little bit less. So, I'm very cognizant of trying to minimize the amount of dilution that we have as we go to finance this project. Now,
Hmm.
the project has a very fast payback, and I'm not scared of doing debt because we can pay it back so quickly. But I am scared of doing debt before we have a very clear runway to commercial production. So what I mean by that is really I don't want to issue any debt until we're like maybe 12 months out from production, because I know mining projects. You often run into some kind of some sort of surprise that delays you for 6 months or 9 months, and I don't want to risk losing the company on
Hmm.
uh, on something. So the second we take debt, we've got a loaded gun, against the head, right? So I just want to be careful about that. And look, I mean, in my view, the beautiful thing about a stream is it's not equity, but it's not debt, and if there's some kind of delay, we can push the risk of delay onto the streamer. They wouldn't like that, but
Hmm.
that's the truth.
Hmm.
Like, we can get the
Hmm.
money to start building, and if there's a delay, like, we're not paying
Yeah,
interest on it, right? It's
yeah,
like,
yeah.
so to
Like
me,
it.
it's like the sweet spot, right?
Yeah,
And
yeah.
and then the other thing I have to add about that is that, when we go to raise equity, right now we're trading at point the market. If you take the market cap and divide it into our NPV, I think it's less than 0.25,
Hmm.
right? Where I can raise money from a streamer at 1 times NAV,
Hmm.
right? And the cost of capital, it's like 1 times NAV with a cost of capital of like 5%.
Hmm.
So to me, it's like, if you do the math, if you really sit down and look at the math, a
Hmm.
stream is far less dilutive than doing equity. Yes, you are giving up some of the economics on the project because you're committing to deliver a certain portion of your production to the streamer who gave you the money up front to build the thing. But it's really a question of how much of the economics are we diluting
Hmm.
with equity versus a stream. And to me, it's no contest. The stream
Hmm.
is very, very attractive right now. And let me add that we will try to negotiate for things like a step down as soon as the amount of the stream is repaid, a 1/3 step down as soon as the existing reserves are exhausted, another 1/3 step down. And then the other thing I hope we'll achieve is a right or an option to buy back half of the stream at some point between now and maybe the first year of production. So we'll try to do things to limit the tail component. The tail
Hmm.
meaning that commitment that you have to deliver ounces to a streamer forever. Like, we'll try to reduce that exposure as much as we can, but at the same time, these guys need to make money too. So we got to strike the right balance.
Hmm. Absolutely. Yep. See the same way. Fully agreed. The question also which I have is how are you doing the things with the mining fleet? Are you considering, let's say, a leasing? Do you want to do, for example, I know Caterpillar quite well. So could it be that you say, hey, why not? Let's do like a leasing, whatever
Oh,
financing contract with them, with those guys, and then it's running.
absolutely. Absolutely.
Mhm.
So, the nice thing is we've got a competitive situation. There's Komatsu out of Japan. The Japanese yen is
Komatsu.
like at the
Mhm.
weakest level it's been in, I don't know, like 30, 40 years. So
Mhm.
Komatsu, because their production is in Japan, is very competitive on pricing. I would say probably more attractive than CAT. But CAT has a
Mhm.
very strong network of maintenance support in Canada,
Mhm.
which makes us obviously, that's a strong point for going with CAT. But like I said, it's competitive. We're looking at leases from both of them. We're looking at which one of them will have the smallest deposit up front.
Mhm.
Because again,
Mhm.
I mean, this project has a after-tax payback on capital of 1.2 years at $1,800
Mhm.
gold. So if we can push things, payments out to after we're in cash flow, that's much better for our shareholders.
Mhm. Yeah, definitely. If we look at the planned life of mine annual production profile, so we see like in year 9, 10, 11, 12, it goes really steeply down.
Yep.
I could imagine with your exploration success you had in the past that you probably can push that out a little bit, huh?
Yes, I fully expect that we'll backfill the second half of the mine life. We'll get better grade
Mhm.
material to add into the mix and get that production profile in the back half
Mhm.
looking more like what it looks currently in the first half of the year, our first half of the mine life, where
Mhm.
um, let's see, right now we're at I think 470,000 gold equivalent ounces in years 1 through 5, and then 370 if you average the first 10 years. And I think Randy's goal is to get that years 5 through 10 looking more like the first 5 years. And I think it's very doable.
Mhm.
And I suspect within the
Mhm.
next 12 to 24 months, we'll get that mine life out to 15 years as well.
Mhm. Wow, super. That's a statement like that. So that brings me also. Well, I will ask that a little bit later. But how do you see maybe more optimization, metallurgy, processing? Because the gold recoveries they were staying at 83%, but you enhanced really nicely for silver from 88% to 91%. Do you think gold recovery could go a little bit
No,
higher?
I look. You never know with Randy. Maybe we'll have another breakthrough, but I'm not hearing any talk that
Hmm.
there's something obvious that we can do on the gold recovery side. However, on the payables from the smelters, I fully expect those to improve. That there
Hmm.
are a lot of smelters that really don't even want to make bids until you're right,
Hmm.
until you're call it within 12 months of production. So
Hmm.
there are a number of guys who held back on giving us proposals, um,
Hmm.
especially the lead zinc smelters, which are super interested in the silver. Um,
Hmm.
I suspect that we could see a meaningful improvement in the smelter payabilities compared to what were in the
Hmm.
last definitive feasibility. I think we could see a 3 or 4% improvement from here in the next couple of
Hmm.
years.
Hmm. Okay. So what are your next, let's say, immediate steps, especially for next year? I mean, you have done now the definitive feasibility. What is next?
Yeah. Well, SNP. Like we're working on a pre-feasibility study right now that I hope will get done in the next 6 months. I also think there's more exploration opportunity at SNP to make that deposit bigger. So we'll be looking
Hmm.
at trying to figure out how we add SNP into the whole sort of mine plan
Hmm.
over the next, it's called 6 to 12 months. Um, there are some other opportunities with exploration. If we ever resolve the albino lake situation, that could be some more material. Um,
Hmm.
there's the regional exploration program. I don't know if your viewers are aware, but we've grown our land package from 12,000 hectares to 100 and almost 180,000 hectares. So we have the
Hmm.
third biggest land package in the Golden Triangle after Newmont and Teck.
Hmm.
So limitless areas to go hunting for more gold and silver.
Okay. Aren't you in fear to be taken over unfriendly?
Well, as my my primary investment banker said to me, "There's no such thing as a hostile takeover. There's only a
Hmm.
hostile takeout price." So
Hmm.
you know, Look, we know what this asset is worth in production. We can look
Hmm.
at comparables like Lundin Gold, for instance. They have a $4 billion market cap, and I think they're producing 350,000 ounces of gold a year. Like we're going to have a
Hmm.
lower all-in sustainable cost than those guys, and we're going to produce more gold per year than them. So if their market cap's 4 billion, and our share price right now or equity value is, call it 475 million Canadian, that's almost like an 8 times,
Hmm.
not taking into account some dilution for raising the equity we need to build it,
Yeah.
but it's easily, 6 or 7x upside from here. So
Hmm.
I am, not eager to go see somebody come in and try to take us out for a 50% premium to where our share price is.
Hmm.
That would be
Makes no
stealing
sense.
one of the best assets in the world.
Yeah.
Um, but at the end of the day, it does come down to, what our shareholders want. Like, and I feel like my job is to make sure they realize what the upside is. This, if you can just be patient for 2.5 years.
Absolutely. When do you think you can be in production? I mean, it's a large project. I'm sure construction time is easily 2 years, probably.
Yeah, it is. We did start a bit of the construction this past summer. We put down a pad, or we flattened a ridge where we're going to build the mill. We've got more construction activities planned next summer, in the summer of 2024, again in the summer of 25, and the idea is to complete construction in the summer of 2026.
Hmm. Okay, and then start really production.
Yep, yeah, starting production
Super.
in the second half of 2026.
So commercial production 2027, hopefully.
Yeah, I mean, I would hope. I would hope we get there sooner. I mean, one of the ideas
Yeah.
is to build up a very large stockpile, such
Hmm.
that right when we turn on the mill, we're not facing any kind of like worries about production ramp up risk. Like we'll have 3 months of ore sitting right there next to the
Hmm.
mill, ready to start feeding it. So it's really a question of how well we can ramp up the mill in 2026.
Okay. Super. Last question. What is cash in the bank? Meaning, are you safe and sound financed until the project finance kicks in?
Yeah, we've got at the end of the September quarter, we just filed financials. We had 34 million Canadian dollars on the balance sheet. I feel like
Hmm.
we're in a good enough place where we can stretch it to Q1, and we're targeting to try to announce project financing in the first quarter. I
Hmm.
don't want to go out and do a bank led equity raise. Those have been painful, the last two that we've done. We've
Hmm.
seen our share price step down each time, so definitely not thinking that way. If we want to raise a little cash along the way, we could always do another royalty on SK as a way to
Hmm.
top up the treasury.
Mhm. Okay, super.
Yep.
Well, Walter, thank you very much for 20 minutes of an update here. That was fantastic. Yeah, we wish you well. I mean, it is a outstanding project. The numbers are fantastic. You guys have done an extraordinary job. So thanks from my side as a shareholder. And yeah, I think we should talk soon then in the first quarter, and hopefully see you at PDAC latest.
That sounds great. Thank you.
Super. Thank you very much, Walter. Yeah, ladies and gentlemen, that was Walter Coles, the executive chairman of Skeena Resources. And you heard it. This is the next big gold mine in Canada. And they are on the run here. The DFS is done. Now they're in the talks for the project finance. First quarter next year, that should be all done. Then 2 year construction time. And then hopefully end of 2026, 2027. In the beginning, there is then the start of the commercial production. That would be outstanding. And I think the numbers speak for itself. Despite inflation and everything, which is all figured in now, the AISC per ounce are below 700 US dollars. This is amazing. This is one of the lowest cost gold projects in the world. And yeah, I think the guys have done a great job. And honestly, the share price is a real bargain. You should really consider to have a very, very close look on Skeena Resources. I am in. You should do that too. Thanks for watching us, and bye bye from Switzerland.